Our business model is to securitize Bitcoin. Bitcoin Treasury Company, that means we hold Bitcoin as our primary treasury asset.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In this video, Michael Saylor will talk about why the Bitcoin standard matters, explaining sound money principles, digital scarcity, decentralization benefits, economic sovereignty, institutional adoption, and wealth preservation. Let's catch him up to know more.
We offer securities to investors that they need to give them they slice various risks of performance, volatility, and risk off of Bitcoin. So some people want low risk, low vol, low performance securities, and to them we would sell them a preferred stock like Strife, or a convertible preferred like Strike, or a convertible bond, right? The convertible bonds are like 70 delta instruments, and Strike is a 30 delta instrument, and Strife is a 0 delta fixed income instrument, and one of them looks like a 20 vol, and one of them looks like a 40 vol, and one of them looks like a 60 vol. And then when we take the leverage from selling those securities, we feed that back into the equity, so that the equity itself ends up being higher vol, higher performance than BTC. So we take, if BTC was a 60-60 type instrument, 60 vol, 60 performance, we aim to create a 90-90 equity.
Mm-hmm.
Because some people want 90 ARR and 90 vol, and then we aim to give somebody else maybe we want to give someone else the 60 ARR 40 vol, with a Strike or with a convertible thing. And maybe we want to give somebody else the 30 ARR 30 vol type instrument. So we're giving people different tranches of volatility, risk, and return. And then, of course, the equity itself is the building block for a whole host of derivatives. So you can build the entire options market, and there's like a massive, like $70 billion open interest in the options market.
Robert Kiyosaki, celebrated author of Rich Dad Poor Dad, has delivered a jaw-dropping Bitcoin forecast, predicting that BTC will soar beyond $1 million by 2035. He warns that the United States is mired in record-high credit card and national debt, rising unemployment, and shrinking pension fund profitability, calling the erosion of 401 savings pensions are being stolen. Kiyosaki insists a great or even greater depression looms, a scenario he first foreshadowed in his early 2000s book Rich Dad's Prophecy, which predicted history's biggest market crash, then unfolding now. Despite the gloomy outlook, Kiyosaki offers a silver lining. The current crypto and precious metals crash presents an easiest money you ever made opportunity. He urges investors to load up on gold, silver, and at least a fraction of a Bitcoin. He believes that acquiring even half a BTC could yield life-changing wealth when the crisis abates. Additionally, he forecasts gold reaching $30,000 per ounce and silver climbing to $3,000 per coin. At present, Bitcoin trades near $84,967, buoyed by a modest 2% weekly gain after stumbling on Jerome Powell's remarks. Kiyosaki's bold predictions and strategic guidance have reignited debates over crypto's role in safeguarding personal fortunes and global wealth strategies effectively.
You can build other ETFs, right? The levered ETFs, the volatility, interest-generating ETFs, the short ETFs, every other flavor of derivative. And our position is Our job is to do what everybody else can't do. So, for example, you can sell, if you're a trader, you can sell covered calls all day long. So I'm not going to do that because you can. What
Mhm.
I'm going to do is create a convertible preferred stock because you can't.
Mhm.
So, so what we're doing is we're creating those various securities, everything from a pure currency swap. Like, for example, if I give you 10% interest and you give me back money and I'm generating BTC yield and you're generating USD yield, that's a pure currency swap. I could do that in Canadian. I could do that in yen. I could do that in euros. I can do that in USD. So that's one type of security. And then above it, I can create the convertible, various flavors of some yield, some conversion rate, all the way up to, you know, pure Bitcoin or high octane, high leverage Bitcoin. And for us, we're always going to aim to make the equity like 1.5 to 2x Bitcoin. And I can't, it's not clear to me how I get much beyond that. But then we leave it to the rest of the financial market to concoct 2x to 200x leverage by using all of their option interest, option tools, etc. And at the end of the day, the result is everybody gets the flavor of volatility, the amount of volatility, the amount of performance, the amount of risk that they want in a liquid fashion on a compliant marketplace, right? That's our mission. It's not going to change, right? Everything we're doing, you can do at the scale of $100 billion enterprise or $200 billion enterprise or $400 billion, or 800 billion or 1.6 trillion or 3.2 trillion or 6.4 trillion, right? It's pretty much the same exact structure. You're just creating more of each type of security. And the thing that makes it possible is that you're building on top of a foundation of a digital scarcity, which is a commodity,
Mhm.
which itself, right? Bitcoin can scale from 2 trillion to 20 trillion to 200 trillion. So to 400 trillion to whatever trillion, right? So everything is very scalable in all directions as long as you maintain a balance in the capital structure between the various instruments.
Debate over Bitcoin's security budget has reignited as experts warn that its model may collapse under strain. Justin Bonds, CIO of Europe's oldest crypto fund Cyber Capital VC, argues that Bitcoin simply cannot succeed because high fees deter everyday use while low fees erode miners' incentives. He warns that BTC is between a pet rock and a hard place with no hope for change. No capacity equals no future. Pseudonymous analyst at Waz Crypto echoes these concerns, predicting that following Bitcoin's next halving in early April 2028, proof-of-work miners will lack sufficient rewards to justify securing the network. With transaction fees unable to plug the gap, the system risks insufficient hash power and heightened vulnerability to attack. Bonds and at Waz Crypto agree that as block rewards dwindle, Bitcoin's security model could become obsolete by 2028 or 2032. Without a sustainable budget for miners, the network's integrity and resistance to manipulation may erode, threatening BTC's hallmark decentralization. This debate has spilled into store-of-value comparisons with Ethereum. Advocates of Ethereum praise its eco-friendlier proof-of-stake consensus and fee structure. Yet FRX founder Sam Kazemian counters that Ethereum's shift to POS and EIP 1559 actually undermined its own store-of-value narrative, illustrating that no model is immune to unforeseen challenges. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.